Trade Genius.
What is going on, guys? Philip at Trade Genius. Welcome to 2020. We had a really good year, and I just would like to thank everyone that was with us in the room for being with us, and look forward to another good, solid year of performance. And actually, the next 24 months in the crypto space is going to be real exciting. So I'm looking forward to what's coming up ahead of us. So stick around, keep watching our channel. We got some really great content coming up. As we are in the new year, I wanted to go over how things perform in the month of January, specifically the first 7 days. So what we've done, guys, is we've put up charts here that have the first 7 days of each January, going back to January 2011, and we have the amounts that the market has moved, specifically Bitcoin, in percentage terms. So if we look at 2011, diving right into this, 9.92%. And this is going from the open of the candle for the first of the year. We'll just take a look at the first 7 candles, and this year we have 9.92%. Going into 2012, you would have seen a 52% increase in the first 7 days. Now I'm taking the high of the first 7 days, so you're never going to get the very tippy top, but that just shows you what you could easily obtain in this first 7 days. 52.62% in 2012. 2013 was relatively flat. One thing I will note is that if you employ a strategy that I'm going to talk about here on this, then you can buy the small dips. And if you did that like in 2013, because this was ranging, if you bought the bottom of the range in the first 7 days, you would have actually made about 3%. In 2014, you would have had 34.57% of range to play with, so a nice gainer there. 2015 is our outlier. This was the 1 year that the first week actually dropped, and it dropped 19.82%. But that's it. This is the only year that we see that. Typically January, as you guys are seeing, is very bullish in the first week. All right, let's look at 2016. 2016, same thing. By today, January 1st, you're up 30.24% on the first 7 days high. So a lot of opportunity to take a nice gain in there. 2017, January 2017, saw a from the open to the high 21.57% gain. And then 2018, you saw a 23.87% gain. And then 2019, now this is coming out of the bear market. We see, even though bearish conditions existed, we still saw a 10% pop in the first 7 days of January. So with the exception of 2015, January 2015, this is just like a no-brainer trade to take on the first day of the month of January. Now, how I would play this is as follows. If you're taking this trade, you don't want to just take it without a stop, because you don't want to end up in this situation if it does happen. So all you're simply going to do is take the low, okay, that you see here. Like for example, in 2016, your stop would be at 416. So you would enter on the open candle 430. Your stop is 415. And then you're going to target, as you can see, this is one of the lower months, 7%, but you're going to be targeting logical levels above, and we're going to actually look at that here. But that's how you would play this. Your stop would be below on the first. You go to the next area where there was a swing low, like here on December 11th, you would be like a stop of 390 on your entry of 475. And like for example here in 2014, just to jump around a little bit, you would enter here, your stop would be below this low here. Okay, so that's all you're going to do. If you entered on 2015, you would have gotten stopped out on that low there, and that's just the way it is. But that's how you would play this. You just take the nearest swing low and put your stop below that. Now, one thing to note, and this is more evident in the last few years since like 2014, after the first week, you want to be trailing a stop up or taking your profits, because after that 7th day, you do see a bit of a pullback and correction. Just keep that in mind, that has been happening quite a bit. Now, 2015 obviously dropped. We had a dead cat bounce and then more downside, especially after the first 7 days, right? So you want to be aware of that. That's been happening almost every year since 2014. After the 7th day, we've been seeing down. So just keep that in mind this year. All right, so what's our situation look like? Well, we are hovering around, really chopping in this range. Now, if you remember, we talked about the stochastics rolling over. They have rolled over. However, one thing we did say is if this downside momentum is done, it would largely absorb the stochastic rollover and these lows would hold. And so far, we're seeing that. If we do get a pop, and you'll notice that 25% takes us to the top of the channel, and that's completely reasonable with this January price action. You've seen 25% before and higher. So getting to the top of this channel in the next 7 days is completely doable. So again, in this situation on the daily chart, you're essentially going to take your stop. Either you have a couple of choices, either below this low here at 70.91, or you can go a little deeper at 70.42. Being that the range is so tight, you could probably go to this lower one, and but you don't want to take any more of a stop more than probably 70.30, because normally these hold. You don't see a lower low, and then we get a move up, and usually the moves are pretty swift. Furthermore, we have a volume void in here, so this is gonna, if it does get up into this range, you can see a really quick pop up to these levels. Looking at the futures chart, we're not going to have much of a gap to speak of when we open here in less than an hour from when we're recording this video. So there's not going to be too much in play there. So we want to take a look at the VWAP levels just to give you an idea of areas to target. We now have a new yearly VWAP of 85.24. Okay, so that's our new yearly VWAP. Price will tend to gravitate around that. So just like we saw around the 2019 VWAP, which was at 74.57, our new home base is going to be 85.24. We have a quarterly VWAP at 80.80. I think that's a reasonable target, and that's going to be up there toward the top of that channel. So those are some VWAP targets. And if we look on the historical VWAP, so these are charting past monthly and quarterly VWAP levels, you'll see that we're kind of bouncing over and under this one VWAP, monthly VWAP from the past at 73.74, and we have a quarterly VWAP up at 7,800, and then we have a little bit of some VWAP clustering here at those just north of 8,000, again near the top of that channel. I think this is a likely candidate for any upside explosive moves for the first week of January. But if we do see a move up, gird your loins for after the 7th, because every single year for the last few years, we've seen a pretty good sized rollover in percentage terms to the downside, but that is a dip to be bought. So don't forget that. And keep in mind, now we're in the final home stretch towards halving. So you are going to see prices grind higher. So just keep that in mind. All right, guys, well, that's it for this video. I hope that helps. Please hit like and subscribe. Really helps out our channel. If you're interested in any of our products or joining us in our trading room, head over to tradelikeagenius.com and check out our specials over there. All right, guys, I will see you on the next video. Take care. Bye-bye.
Trade Genius.